in my personal view, I think it is a very, very fair balancing act between fiscal and growth. And overall, the orientation has been growth rather than to take populist measures, which was, let's say, expected before the budget. And there is a, so if you see, there's an increase in capital expenditure, there is a fiscal expansion or usage of the fiscal room, and all of them have been directed towards the budget. And many sectors would benefit out of it. I think everybody who's in capital goods, engineering, etc., will benefit out of it. There is a special emphasis on PLI. There is a special
Yes.
emphasis on defense. So all in all, I think the budget will have the budget does push a growth agenda, and we should see that playing out. If they execute it well, it will have a cascading effect on growth all across. See, I think the major power or the major objective of a merger and acquisition is actually to add to something which the company is doing. Either it could be a skill gap, or it could be a new product line, or expansion. I mean, something which the company doesn't have, and if it has to do in a greenfield manner, it will take much longer, and the chances of success could be much lower. That is the fundamental premise on which mergers and acquisitions work. And what we have seen over the last 3 years is that the activity has really ballooned. I mean, even if you see large groups of the likes of Reliance or even Tata's, I mean, Tata's buying a big basket, or Reliance buying a Just Dial, Sterling Winson, or expansion in renewable spaces. These are large groups, and they have gone ahead and done these acquisition in spaces in which they want to make a presence felt. In addition to that, there's a lot of M&A activity that has happened through the financial sponsors or the private equity players who basically help companies augment these business lines by way of mergers and acquisitions. So what used to happen earlier, let's say 5-10 years back, and what is happening now, in my view, has changed a lot. The propensity of success and the way in which these things are happening has changed a lot. And you're seeing that many of the conglomerates and small companies are using this route to expand into newer areas and newer geographies. So it's playing out really well. From a year-to-year perspective, many things actually play out, right?
Okay.
There is also an overall sentiment. There is a level of valuation at which companies are available. But from an intent perspective, I think things are in place. We may see 2022 calendar year being a bit volatile because of whatever is happening at a macro level globally, because there is a turn in trend, right? I mean, from a excess liquidity position, which has been there, let's say from the GFC times, the stance across the globe is changing, because
Right.
things are back to what we used to call the normal. And there will be an adjustment phase. And during this adjustment phase, how things will play out, one can only predict or forecast, but I don't know how certain that prediction will be. But to my mind, things have changed. The way companies are going about doing M&A, the government intent, the way private equity money is coming in. I mean, there is cross-border activity, right? Cross-border activity may not be at a company level, but this entire inflow of, let's say, FDI and private equity money coming in is nothing but cross-border. See, there's a very interesting data on the FII flow, Anupama. If you go and see history, I think I was just looking it up, for the past 7 years, I think on a net basis, only 2 years have been positive, and markets have still held up. While there is temporary blip that happens in the market, changes happen in the market, but it's not the only defining factor. Having said that, Q4, to my mind, I don't see the trend changing. The trend has been outflows. I don't really see the trend can change so easily.
Okay.
Because there are, in addition to what is happening in India, there is, as I said, a lot happening globally, right? And when such macro things happen, there is a period of adjustment. People want to be closer to where they feel more comfortable or at home. And so the flows or the outflows may continue. But very frankly, I think the pace could get muted, because a lot of it has already flown out. Maybe now it could be a trickle kind of a thing rather than massive outflows unless there is some uncertain event which happens globally again. But I don't see the trend changing to positive very soon. So I think it's an opportunity, right? What this COVID did was actually made people aware of multiple things. It made them aware of a single country risk from a supply chain perspective, and they I think will want to work on alternatives in future. That if such an event were to unfold again, they have a backup or they have a consistent backup, so that there is no significant uncontrollable disruption. So that is the opportunity which India has, but it needs to be executed. It's not easy because you need to do multiple things. You need to work on multiple fronts to promote that activity. But do we stand a chance? Yes, we definitely stand a chance, which has been given by this entire supply chain disruption which happened. But having said that, I mean, yeah, people's memories are also short. So maybe, a year down the line, China will be back in the game. So we have little time, but we need to execute in that time to become a compelling parallel alternative to the global manufacturing base. We should actually look at both of them separately. SMEs, unfortunately, may have gotten the raw end of the deal because of the pandemic, because their ability to sustain shocks and withstand, business disruption is significantly lower. So, but I expect and assume that this is a once in a lifetime phenomena, may not get repeated. But this does open our eyes as to there should be activity done to make the SMEs stronger in the country, right? I mean, a large percentage of them are still having credit only from the informal sector. There has to be effort to bring them into the formal sector. Much has been done. I'm not taking away from that. There are credit guarantee schemes. There's a credit trust which has been made by the government. There is a fund which has been done by the government. But given the size, scale, and the sheer employment, I mean, India is a land of SMEs, right? I think much more has to be done to bring about access to credit for them. And one is, of course, credit from the banking and the non-banking financial services system. But there also should be some mechanism in which, funds, credit funds, private equity funds, these are incentivized and promoted, that they are also able to give alternative sources of finance to these companies. Then there should be encouragement to entrepreneurs to create services which can benefit SMEs, like, a digital CFO, digital supply chain man, because many of these are so small that they do not have the ability to create a formal organization to deal with many of the things which they do, and which essentially leads to inefficiencies, lower profitabilities, and inability to withstand shocks. So something which, helps or incentivizes entrepreneurs to do startups which can solve these problems of SMEs will be very welcome.